Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the markets are looking much happier, a brighter shade of green towards the closing of the session than the morning session today. 218 points higher for the Nifty. We are back above 24,900 at 24,936. This is largely driven by a broad-based sectoral move that we are seeing across the board. All the sectors are higher, especially the IT sector is driving most part of the gains. The index of IT is up by about 1.6% in trade. You also have the real estate, metals, infra, oil and gas stories also doing well at this point. Broader markets have also improved for the better today. Now you can see on almost 0.9% of an uptick on the mid caps and small caps. So it's the broad-based recovery and the rally that's shaping up in trade today. On the Nifty, you have UltraTech Cement, SBI Life, Bharat Electronics, HDFC Life as the top movers at this point in time. Gains of upwards of over 2% can be seen on top 4-5 movers. You only have just 4 stocks in the red now on the Nifty. Tata Motors, Dr. Reddy's, Adani Ports and Sun Pharma, where minor losses can actually be seen on trade at this point in time. There are PSU stocks that are hovering almost 1% higher in BES as well, and of course stock-specific action that continues to be in focus as well. Let's now welcome our guest on board to understand a little bit more on as to how should one really read the sentiment in the markets right now and what's the outlook going forward. Mr. Abhishek Basumallick, co-founder and fund manager at Shree Rama Managers PMS, is now joining in on the program with us. Warm welcome to you, Abhishek sir, and thank you so much for taking the time out. A fresh wave of momentum that's come in after the markets digested geopolitical moves, spike in crude oil prices last Thursday and Friday, and of course over the weekend as the geopolitical tensions in Israel and Iran continued to escalate. I wanted to just read up your outlook on the markets right now. Are you cutting the noise right now, just focusing on the long term at this point, not too much worried about the spike in the crude oil prices or the geopolitical tensions, or are you looking at it with one keen vigil?
So first of all, good afternoon to you and all your viewers. Interestingly, today crude oil is down. I was actually looking at it some time back. So it is evident that global markets are not as anxious as newsrooms across the world are, right? So it's like I said before, like we are in volatile times, and hopefully, probably, my timeline was sometime in June, July. A lot of this volatility, at least in the news cycle, is going to slow down. Because ultimately what is important is the rate of change. And we've already seen, the US president's tweets have reduced, not too much happening on that side. Instead of that, that slack has been taken over by this new fresh wave of, sort of war that is going on now between Israel and Iran. So the point is that these kinds of things is going to continue to happen over the next few years. I don't, think that it is all going to suddenly die down. It has been picking up for the last couple of years. It's going to probably continue like this. Some region or the other in the world is going to sort of become problematic. And what is more likely to happen is that investors across the globe are going to, sort of factor that in. That, okay, there are going to be geopolitical challenges, but that is not going to prevent businesses from running. It is not going to prevent the economy from functioning. So with that backdrop, I think we should be looking at the markets. Short term, if very short term, very difficult to figure out what is going to happen. But I think medium to long term, I'm actually fairly bullish once again.
Yes. Now, Abhishek sir, help me understand when it comes to, again, across the globe, the other overhang that we are waiting for is tariffs, something that we've discussed in the past as well. Deal seems to be now done. China has affirmed a deal as well. We're yet to see the contours, though. There is some softness on the rare earth magnets that was emerging as the fresh concern as well over there. Now, I want to understand from you, 1 month to go or less than that for the deadline on the tariffs or the reciprocal tariffs is concerned. There are some indications that probably with other trading partners, this deadline could be extended as well. Should one be anxious at all with respect to why India has not got a deal done yet with US, and or should one be probably taking heart from the fact that they are open to listening in to the partners, and it could rather be on the positive side than negative when it comes to the tariff talk?
I don't think it's going to be material at all. All this tariff talk, etc., is just simple noise. Ultimately, the most likely situation a few months down the line is that US is going to have some form of tariffs, 5, 8, 10, 12, 15% for most products across the world, and maybe some will be negotiated downwards, but in general US is going to, like what it's currently is, right? The status quo is roughly 10% tariffs. I think that is where we will end up with across the world. Some countries will get a slightly better deal, some countries will get slightly worse off. My guess is India will be on the side of those countries where we will be slightly better off compared to our main competitors in terms of exports, which is likely China, Vietnam, etc., etc. So I don't see tariffs as a big concern. I think the opening gambit that the US president played, I think that has played out. Now it's just a matter of adjusting incrementally to what is happening. Coming to your second point on rare earth metals and things like that. Now, from the auto industry, if you remember during COVID, there was a similar kind of a problem with semiconductors, right?
Yes, absolutely.
My understanding is that the rare earth metal input problem is actually far lower than the semiconductor problem, and even then, it did not have a very big impact. I don't think it is going to have a very big impact now. And in a way, these are going to help India also mine its own rare metals, which sort of was on the back burner. Now these are going to be opportunities for the country to invest in these areas.
Absolutely. Back home, when we talk about, I think things are getting much better. We had the RBI bazooka rate cut. So EMIs are getting easier on the pocket. Inflation is cooling off as well, now to a 2.82%. We had the wholesale inflation also slipping further this morning, 0.39% order. So, of course, we are looking at the support coming in from both fiscal and monetary policy now, probably going to be aiding the economic growth aspect as well. So things are working well. Earnings were not too bad in as was being anticipated as in Q4 too. What does all of this augur for how the markets may be shaping up going forward?
So, exactly the points that you made are the ones that make me bullish medium to long term, right? I mean, India inflation is primarily because of food and fuel. Fuel seems again, I mean, I don't know what is going to happen today, tomorrow in the short term with this Middle East crisis, but as of now, there's been no major, huge spike. If that happens, we'll have to, sort of reevaluate. But without that, I think fuel has been range bound. Food inflation has been coming off drastically, which has actually led to the fall in the overall inflation that has been there. So overall inflation is in a very, sort of benign way that we've seen. And couple that with corporate results, I think analysts, so people were expecting actually slightly worse results, but we've seen fair number of companies where margins expansions have happened, profit growth has happened, revenue growth has happened, and couple that with a reducing interest rate regime, and we could actually see a pretty good second half of the year.
Okay, pretty good second half of the year is what's being expected. Let's talk themes and sectors, sir. Have you made any changes there, any additions there? How are you looking at fresh focus points for the investors if one has to actually work for the second half then?
See, I think long-term themes remain the same. Short-term, I think again we are getting into that phase of sectoral rotation. So if you see, I think IT, which was sort of completely beaten down, is starting to pick up.
Yes.
Pharma again is doing well. I think banking, defense, etc., is sort of consolidating to an extent. So we will, I think, continue to see a healthy sector rotation every month, 2 months, which in a way is good. We don't want any particular sector or any particular set of stocks just completely shoot up and create imbalances. It's always better to have a broad-based growth or a broad-based recovery from the fall that we've had. So I think uh, industry specific, I think uh, the overall focus remains the same. I'm still bullish on chemicals, banking, auto ancillaries specifically, uh, uh, capital goods, manufacturing. Uh, Pretty much these the same things that I've been speaking for the last few months.
Okay. Continue to build on the story that you have been focusing on, and the same themes and sectors are positive. How would you look at defense after the recent run-up? I think the shipbuilders continue to have the momentum even now. Even today, Shipping Corporation of India, GE Shipping, Cochin, Mazicon, they're all up in trade even today. So the defense move continues. Some uptick in the railways pack as well. Are there excesses already being seen here, sir?
I don't think so. I mean, railways, if you see, probably went down and sideways for probably close to a year or maybe 8, 10 months. So again, we are seeing Kavach orders coming through. We are seeing railway orders coming through. So I think railway is going to continue to be one of the prime focus areas for investment by the government. So that theme actually over the medium to long term remains extremely strong.
Okay. Let's talk about some of the other stories as well. You did talk about IT already. I'm going to be talking about pharma. What's your fresh view here? We are looking at some news updates. Sun Pharma was in news on the entire weekend with respect to management changes, observations that continue from for the Halol plant from US FDA as well. NATCO has also got some observations there. But healthcare has been consistently improving. Names like Apollo, Max, they're in focus. Fortis, they are getting back in focus again. Cipla, Dr. Reddy's continues to show some uptrends too. How is your fresh approach to this entire pack, and how would you look at some names here?
So let's look at pharma and healthcare slightly. Let's differentiate. So first of all, if you look at the hospitals and that value chain, hospital diagnostics, etc., one mega theme that is going on right now on the ground in India is actually a value migration theme of from sort of small individual units to large corporate entities. So previously, if you see, we had small hospitals, small nursing homes in cities. They are increasingly being taken over by the larger players. Same in the diagnostic space. Previously, we had small standalone entities. Now we have these large chains which are uh, sort of spreading all across the country. So we are actually in a very long-term phase of consolidation in this space. So it's pretty much like what we saw as the rise of, say, the private banking space. Here we are seeing the rise of the private hospitals, private diagnostic space, and this is a long-term theme. So this continues to remain good. If I look at pharma, you have multiple again segments within that. You have export-focused pharma, you have domestic-focused pharma,
Yeah.
you have generics, you have all sorts, right? So we have to be picky and choosy. I think the entire pharma space looks very interesting. One, because uh, if you see that even the larger export players, although there is some uncertainty because of tariff action and what Trump might say or do for US exports. But the fact remains that the Indian drugs that we export to the US are by far the cheapest that it is available in the US, right? So, if the objective for the US government is to reduce
Yeah.
healthcare costs, uh, India or Indian products are I mean, it is the obvious choice, uh, for benefiting, right? You can't, the problem more is going to be in the US patented products, not the generics that is going there. There might be some, pushes and pulls and pressures to move part of the manufacturing, etc. there. And maybe over a longer term, some manufacturing presence in the US, etc., might not be a bad idea as well, because if you are going to sort of export a very large amount, you need to have some kind of presence, uh, purely from a supply chain resilience perspective. So overall, I think pharma, again, as a very long-term theme, looks very good. Uh, at the cost of dragging on this point, just another theme is uh, the entries or the API manufacturers or the chemical manufacturers that support the pharma industry. A large part of it has, sort of had migrated to China. Some of it is coming back to India. So that is also another very interesting, segment that we are looking into.
Absolutely. So that's the pharma story and how it's going to be likely playing out going forward from here. What about FMCG, sir? Any signs of it returning to momentum, or is it still a far-fetched space? And why is it taking so long when everything is working in the favor of consumption? You know, we've had the budgetary support that came in by way of tax cuts, so consumption could be boosted. We have the rate cuts now taking place consistently as was being expected, in fact better than expectations. We also have a normal and above normal rainfall earlier than expected, probably the earliest onset of monsoons that we've seen in many years now. So when everything is working in favor, both micro and macro, why do you think the consumption space hasn't still picked up the way it should have, or we were expecting it to be?
So in FMCG, I think there are two factors. One is competition, and the second is distribution, and both are interlinked together. See, what has happened with the onset of all these commerce players and the quick commerce players is the moat that the larger FMCG giants had was that of distribution, right? That has been sort of broken down to a large extent. So today, even a very small regional player can create a soap or a shampoo or a cream or whatever, a toothpaste, and put it on quick commerce or put it on e-commerce platform and get traction. And that is, I think, what is playing out. So if you look at the overall consumption of FMCG, products, you will see that it has not actually gone down. It has actually been growing at a reasonable pace. What is the problem is that the sales of the large listed behemoths is going down because the competition, at least at regional levels, is coming in significantly from these new startup B2C players. So I don't see that trend changing. In fact, that trend actually can accelerate with more and more players, because FMCG at a very broad level is not a very high entry barrier industry. I mean, that is one challenge that the large players are facing now.
Absolutely. Now, also wanted to just get a sense on the broader index as well, the mid and the small caps. How should one approach this space? Is it going to be, again, a very stock selective approach at this point in time? Will one make a mistake by going, index based at this point? Because the index has been showing some resilience, has been recovering as well. But how does one really identify the point where probably gets into a frothy situation, something that came up in conversations last year around the same time, and that's when things started to go downward for the mid and the small caps. So how does a retail investor really identify with the mid and small caps? How much is too much?
So I think, first of all, unless you are investing in an index fund, one should not continuously look at indices because, let's say a Nifty Midcap 100 or a NSE 500 or whatever, right? You're not buying hundreds, 100, 150, 500 stocks. Uh, it pays much more dividends to look at the stocks that you hold, the industries that you are holding, and uh, having a broad understanding of the future in those stocks or those industries. Broad based, makes doesn't make too much of sense because in India, because we are market cap, weighted, most of these indices are very heavy on financials, banking. So you might actually see a bump up once the financials do well. But if you have a very broad, diversified portfolio, you might actually be underperforming, a particular index. But does it mean that that is a bad thing? I don't think so, because end of the day, your expectation from a portfolio is that over a period of time, which is, in my opinion, at least 3 to 5 years or more, you are looking for good absolute growth, right? And that will happen, provided you have a decent selection of companies where the businesses itself are growing, and that is the bottom line. So over fixating on indices is to me not going to be very helpful.
Let me just take a minute to reiterate for the viewers the market and the move. We are nearing a percent high move on the Nifty. We are above 24,950 right now, 236 points higher. All the sectors are in the green, with India VIX now down 1.5% at 14.8 odd levels. 1.5% gains for IT, real estate also 1.5% higher. Oil and gas, metals, infra, small and mid caps also doing very well. Private banks are also supporting the indices. In fact, the top contributors on the Nifty on the higher side are HDFC Bank and ICICI Bank. The third one is Reliance Industries. So it's the banks, the large private sector ones, and Reliance Industries. Along with this, IT names like Infosys, TCS. You also have Bharti Airtel, that's among the top contributors at this point in time. You're also looking at cement names like UltraTech Cement also inching higher. You have defense names like HAL, BEL back in focus. You have the oil and gas names, especially the gas related ones like IGL, MGL, that are pulling up higher in the F&O space as well. So that's how the momentum is building on. Let's start off with the banks now, Abhishek sir, and help us understand what's your fresh approach on the two largest private sector banks, HDFC and ICICI, after the recent run-up has been seen, after the contribution in the recovery rally has been already seen, higher highs have been seen for both these banks. Do they still have this team to go up from here? Can one still safely keep on accumulating or investing afresh?
I would think so. I mean, most of the banking sector, obviously the large private banks, the mid-sized, private banks, NBFCs, even the public sector banks, all of them look very, very interesting, look very good. The rate cuts is going to be uh, helpful for credit growth. So overall, I think it looks good. And the last couple of years, uh, the situation with MFIs, I think, is also sort of playing out. And maybe we are at the last quarter or last 2 quarters of pain in the MFIs. So they are again in a good place to be bought if you have a slightly longer term view.
Okay, so that's the banking story for all our viewers to see. HDFC Bank I actually also wanted to focus on because there are fresh reports that actually indicate that HDB Financial Services IPO could be actually coming in by the end of June. Now this could be, an upwards of 12,000 odd crore rupees of an IPO that we are given to understand. Some reports also indicate that the valuations could be around 62,000 odd crore rupees. Now if somebody is a keen tracker of the unlisted market, they would know that the valuations that are being indicated in the listed space is nearly half of what it is being traded in the unlisted market. Of course, it's a grey market and an unregulated market, so we don't make a mention too often. But for somebody who's been tracking all these updates would know that. How would you look at this opportunity now? We have seen some of the key IPOs recently from such large conglomerates in the last couple of years. We had Tata Technologies, say from a Tata group. We had Bajaj Housing Finance from the Bajaj group. Now you have HDB that's coming in from HDFC Bank. Looking at Bajaj, it's not really shown up as much of promise as investors would have hoped for in the beginning few months. Again, for Tata Tech, it's not been so. And therefore, if you look at such instances, how should one be really looking at HDB as an opportunity, or it does not have any connection there?
Precisely what you mentioned, and that is one of the reasons why like I always say, I want to give companies some time after they are listed, because the froth and the enthusiasm, all of that goes away. And the two examples that you took, Tata Technologies, Bajaj Housing, the stocks have not done all that well since listing. I think Bajaj Housing has done reasonably okay, but not great. Tata Tech has not done well. But I think, again, if you give it time, the businesses are very, very strong, and there will be a time when you will be able to buy it. So I'm always for having new IPOs, because it increases our options in investing. But I'm not, in favor of jumping into and buying IPOs, because most of the IPOs that we get are overpriced, because it's a seller's market. The person who's selling it wants the most amount of money for their, buck.
Okay, got that. So I hope this has also helped all our viewers get a point there. We'll also focus on some of the other aspects. Insurance companies, have you been looking at of late? They've been showing us some momentum. What should be the ideal approach here? Now, all of us as a investor who may be looking at the absolute long term, for those who are building their core portfolios for 5 years, 10 years, they do know that insurance as a space must have some growth opportunities, because we are very under-penetrated market when it comes to insurance. The government is doing its bit to get all hands on board to ensure that more and more people get adequate health and term life insurance, and at affordable premiums as well. There is competition rising even in the private players. There are so many newer players, bigger conglomerates also entering the same space. How should one be identifying if there is an opportunity, and whether one should look at it for 1 or 2 years kind of a story, or a 5-10 years kind of a story?
So insurance, if you see, is actually a fairly good business if it can be run well. In fact, since last year, I had turned bullish on insurance. It sort of proved that I was 1 year early, because nothing happened practically for a year. Now it is beginning to happen. But I think in a nutshell, what has happened is last 3-4 years, there's been a lot of mergers, acquisitions that has happened. Most of the policies that were up for changing has been changed. So now we have a situation where the
Yeah.
2 quarters. Now you will find slowly that companies which have better products, which have better distribution, etc., will start doing well. And there are number of good insurance companies in India, both in the life as well as in the general insurance space, that are continuously, posting good results for the last 2-3 years. Overall, I'm actually quite reasonably bullish on both the life insurance as well as the general insurance space in India. It's, I think, going to give a decent compounded return over the next maybe 3 to 5 years. It may not be, blockbuster, off the charts kind of thing, but these will be good compounders over long periods of time.
Absolutely. Okay, got that. Any key suggestions towards the end of our conversation today that you would want to pass on to all our viewers? Any key stock ideas that you may be looking at adding to your clients' portfolios, or any focus area that one needs to definitely watch out for?
So I think the most important thing is that last 6-8 months have been tough for most investors. Markets have been extremely choppy. They've been correcting. So a lot of investors would have become very nervous. They would have started questioning their overall thesis of investing. I think these are nothing but pullbacks in a larger bull market that we have in India. In a 1, 2 year, 3 year bull market, you get a 6, 7 month pullback, and then the bull market resumes. I guess we've sort of come to that stage where the bull market has again resumed, and year, 2 years down the line will be much higher levels from here. So the point, probably the most important point is not to be afraid, not to get disillusioned by what has happened in the last 6 months, and remain or remember why you have invested in the first place, and then continue with your whatever your objectives are. I think remaining invested is going to be more important than ever, because you don't want to miss out on the big opportunity of wealth creation over the next 5 years.
Absolutely. So, Abhishek sir, it's always a pleasure to have you with us and to seek such wonderful insights that you always have to share with all our viewers. I hope you have a great time, and we'll continue to keep noting all these points. We'll chunk a lot of interesting parts of this conversation on our YouTube channel and on our social media for all of you viewers who missed this conversation to go back and keep referring to all those practical advice that Mr. Basumallick has shared with us. Thank you so much, sir, for being with us today. All right, we are ending near the high point of the day, viewers. 24,944, a minute to go before we end. But it's turned out to be a rather good day, for the markets, especially after the first initial hour of a muted move. And then the markets picked up pace, and how. HDFC Bank, ICICI Bank, Reliance, Bharti Airtel are to thank. IT stocks are to thank, 1.5% higher. Both large and mid caps, those were the ones that were up. All the sectors are in the positive today. Insurance names buzz. You have defense names that were buzzing too. BL, you also have HAL. Even the railway related stocks, many of them were up and about today. Power related stocks were up. FNO, you have Supreme Industries, Indraprastha Gas, PI Industries, Prestige Estates, also up in trade today. Then let's look at the broadest index. You have names like Subros Limited up and about 20% circuit for this one. Names like Sterlite Technology is almost 20%. Names like Bharat Rasayan, Omax Limited from the real estate space again. Expansion coming into Amritsar for this one. That's what moved in the markets today. 20 microns, names like Archie's Limited, Matrimony, all of these stocks also moved up in trade. When we look at the banking, the NBFC space at large, again, Bajaj Finance was in focus because of the bonus split adjusted price that you are now looking at. Let's pull up Bajaj Finance as well to see how it is ending in trade. Many of you must be watching this price for the first time as well. The stock now of Bajaj Finance is in 3 digits, 938 levels. It's not 90% lower. This will get adjusted tomorrow. But remember, it's 4:1 bonus and the stock split that's come into focus. And now we will start tracking Bajaj Finance from 3 digits onwards yet again. But NBFC space, Anand Rathi Wealth, IFL Finance, so many names, GOG 361 also moved up in trade. So there were many stock specific stories, and the overall markets that pulled up. 24,946. How soon will 25,000 come in and stay longer than last time around this time? Remember, last time it was 5 straight sessions when we saw 25,000 being stayed put. Let's see whether tomorrow is the day when we will see 25K and beyond kind of levels. Stay tuned with us onto Business Today Television to track all the news beyond the stock market hours from the world of business and finance. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock related queries. In case you're here for the first time, then you could log on to our YouTube channel Business Today, go on to Daily Calls Live, send us your questions in the comments section. Alternatively, you can also dial in and mention your questions on this one.